Jide, it's great to have you on the show. I know you're a fund manager, so I really want to hear your thoughts about your expectations for the capital market. I noted yesterday that RenCap reviewed its price targets for some banks. To me, that suggests that everyone is bullish about the future. Your thoughts about what we can expect from the capital market? It's gained well over 15% in the first month of 2013. What are your expectations going forward for the equity market?
Hi, Wole. Our expectations are quite bullish. I think across the market this year, there's a positive sentiment in the market right now, and it's not a Nigerian issue. If you look at the emerging markets generally, even the developed markets as well, you would see that there's a general return to risk, and there's an increase in confidence level across markets. And so that's the main factor that is fueling the kind of bullish sentiments we're seeing in the market this year. And we don't consider it an anomaly. You recall that we've always been emphasizing the fact that stocks are currently trading at depressed levels. Yeah. But it's just that investors were very cautious and were just not willing to take the move. And right now, given that there's a return to risk and some of the reforms that the stock exchange is doing locally as well, those are some of the factors that are really fueling the kind of activities we are seeing in the market right now. And so we are comfortable with it. We think that it's in line with our expectation, and we expect it to be sustained as well.
You know, I think an important point to make now is the fact that things have really changed when you look at the correlation of Nigeria's market with global markets. I know in maybe 4 or 5 years ago, the correlation wasn't very strong. Sometimes we see the Dow moving higher and Nigeria coming down. But it seems that is beginning to change, and I want to get your thoughts about that dynamic.
Absolutely, it is. I think post-2008, what we've seen in the local market is that the correlation has continued to increase over the period. And that's largely, on the one hand, because local investors for a significant period of time have more or less decided to kind of hold their equity baskets or even pull back some of their exposures. And to that extent, what you would then find is that the real liquidity for the market and the key drivers were foreign portfolio inflows coming into the market. And that's what we've seen in the last 2 to 3 years. Now, ending of last year's stroke, so far in 2013, we've seen local fund managers as well having to take up their equity exposures. We've seen a situation where, unlike last year, where yields on fixed income securities were at mid-teens and above, right now it's been trending downwards. And so what you then find is that fund managers are forced to look for alternative instruments to help them enhance the returns on their portfolio. So based on that, also you look at the external reserve as well. Over the last about a year now, let's just say post-July, we've continued to see a month-on-month appreciation on the external reserve from a level of 36 billion in July to about 46 billion right now. So those fundamentals are all positive, and to that extent, I mean, fund managers, both locally and foreign, have had to express their views via increased equity exposure. Right. And that's why you continue to see that correlation as well. If you look at even foreign fund managers, before now were perhaps not very comfortable with the risk of some of the emerging and frontier markets. But given that the growth from a top level is supposed to come out of the emerging markets, they are forced to make more and more allocation into that market. Now, as they increase their allocation, they would also have to react to developments from their own market. And so that's why you see, once there's a negative flow coming out there, whether it's the concern regarding the US fiscal cliff or a double dip recession or the Eurozone, once they begin to act in their own market,
so all those things beginning to,
here as well.
All those factors begin to impact Nigeria as well. I think you make an important point about the external reserves, because because foreign investors are coming into this market, they continue to look at those foreign reserves to get a sense of the cushion that the central bank has to defend the naira. Of course, any naira weakness is something that gets many of them very, very concerned. But let's move on to some news in the market today. And of course, UAC Property Development expected to hold its completion board meeting for a 30 billion naira real estate investment trust. And I think it's an opportunity to talk about the real estate sector and your thoughts on whether or not one should be allocating to that space right now.
I mean, we are very, very big on the real estate sector. We think it's a sector that offers huge potential for investors. If you look at the fact that we're looking at over 15 million housing deficits in Nigeria, with a growing population of about 4 million people annually, then you get a clear sense of the fact that the fundamentals for that sector are positive in terms of you being able to participate in that sector. However, what you find is that there are some key issues regarding, if you look at administrative issues regarding title of transfer, you look at concerns regarding the tax regime vis-a-vis the way it affects the real estate sector, and the fact that the pure cost of operation is just not as efficient as it could be. Those are the key reasons why you haven't seen a lot of participation in that sector. And it's in the light of that that Stanbic IBTC held a REIT roundtable last week to kind of bring the various stakeholders into the market and kind of attempt to decompose the issues, highlight the challenges that operators are having, and try to get the various stakeholders to work together so we can resolve some of these issues. So from our own perspective, it's a sector we like to play in from a product launch perspective, as well as from an investor that just wants to find appropriate vehicles to optimally allocate clients' assets.
Is this something that you're going to be investing in, though? We know the IPO should be out in another few weeks.
Yes, when the document comes out following their completion board meeting, we'll take a critical look at it. We'd like to see how it resolves some of these issues that I've highlighted. Right. If it does and offers competitive returns, certainly we would like to participate in it.
All right, let's leave it there. Thank you so much, Jide. Jide Allo is an investment manager at Stanbic IBTC Asset Management, joining us from, of course, Stanbic IBTC.